Hello, everyone, and welcome to another edition of the Forex Technical Market Update. Yes, I know some of you have really wanted to hear my voice again after numerous requests from emails. We to say why have the Forex market updates been been dormant and requesting that they come back. I have obliged and I am here to produce your Forex market updates once again. What we are going to do is we're going to do the market updates once, maybe twice per week, because one of the reasons why we kind of suspended them for a while is just due to time constraints. I had a couple other projects going on, market related, and they took up most of my mornings. So what I am committed to do after seeing all your feedback and all your emails is to do the market updates once a week. So we'll give you a thorough update on what's happening in the markets and the potential profit opportunities that I see in the markets. It's also good to be back and giving you fellows and you gals the updates. Now, in the meantime, what we have been doing is that we have been really concentrating on trying to change the lives of traders. So I have been working with traders who really want to make a difference with their trading and really want to progress with their trading. I am not trying to sound rude or anything but most folks say that they want to become good traders, and most folks say they want to advance in their trading, but they are not really willing to do the steps that's necessary to advance in their trading. So what we have been doing over the last couple of months is identifying that 1% of folks who really want to take their trading to the next level, and we have been working with them using a specific formula that has been yielding some good results so far. And it's essentially something that can change your life and your financial life, but you really have to want to do it. So that's what we really have been doing here at Aces Trading, working with the 1% of folks who really want to become good traders. Okay, other announcements with the with the format that we're going to proceed from now on. The Forex income system is currently closed to new members. Yes, we are still trading for older members, but it's currently closed, so you cannot get in the Forex income system under the present format. When that changes, we will let you know. Okay. Okay, so what we have in front of us, let's get on to the market update. Enough of the announcements. What we have, and you can give the feedback of what you think to info at acestrading.com. So what we have in front of us is a chart of the US dollar index, and a US dollar index is a composite of the different currencies. And what we see is a sideways moving market. We see a market that ever since it topped out in March 2015, we're currently in March 2016, and the market has essentially just moved sideways, as you can see by these channel lines here. So what we are looking for as folks who are anticipate what's essentially going to happen, we're looking to see and looking for clues of a breakout in this market. So if we get a significant close below this area, this 92.50 area on the US dollar index, you can expect a pretty strong move to the downside. And that's based on a history of these breakouts. And if the market moves to the upside, we can expect a pretty strong move to the upside. Now, obviously, the markets can do whatever it wants. So we're just telling you what will more likely happen than not. And it's essential that when you're trading to execute and to utilize proper risk management. But the longer that these consolidation patterns do occur, normally means that the bigger the breakout does happen when it does occur. Taking a look at the euro versus the US dollar, euro since last year, similar with the US dollar index, has been moving sideways, and I know this has been frustrating a lot of traders and a lot of trend traders who focus on the euro dollar. And as we can see, let me just draw the boundaries here. As you can see, this market is also moving sideways, essentially between 114, or let's say 115, down to 105, and we're currently essentially in smack dab in the middle of that at 110.43. So the euro, we are, what we can anticipate with the euro is we're looking for a breakout. And as you can see, what happened here, this was in August of last year, we did have a false breakout. The market did close above the trend line or channel line, but closed right back inside, and then we went to the downside. So if we do get a breakout, what you could probably wait on is a weekly breakout. Let the market close on a weekly basis before jumping in, if you want to be extra careful. If not, you can just jump in on a daily break of the market, whichever direction that goes. But just because the US dollar index and the euro has been moving sideways, that does not mean that opportunities aren't there. We have had a pretty strong downtrend in the British pound, and as you can see, this run from in December, mid-December down to early January was from 152 down to 142, over 1,000 pips in the markets. Market then went from 146 to 138. So another strong move down in the British pound versus US dollar. And for those of you who know our trading style here, it's a trend trading method. We look for trends and look to exploit these longer term trends in the markets. And that's how we think is the best way to make money in these markets. Taking a look at the Canadian dollar versus the US dollar, we have had a move up in the Canadian dollar and a retracement. And what's happening is that the market is looking like it has retraced to just above the 78 or 0.786 retracement level in the US dollar versus the Canadian dollar. And what we could see is this market move back to the upside or retest this 132 region. And if you take this buy signal, remember to have your stop loss in place, because the market can go against you. One of the biggest errors that we see with our students of the markets is that they're just risking too much per trade. So always keep in mind that you have to risk small amounts in the markets, and that's one of the keys to success. Japanese yen versus the US dollar, what we saw is the market, let's just bring up a daily chart of this. What we saw is the market break below long-term support and this happened in February. As you can see here, the market, this 116 area was acting as support in the market. It tested it once, twice, 3 times, and then the market broke down below and is looking like we may get further action to the downside on the US dollar versus the Japanese yen. So that's something definitely to look out for. Another market that has been moving is the gold market, and I haven't really done an update on the gold market in a while on the Forex update, but when we compress this chart, and sometimes it's good to look at other charts. When we compress this chart here, we see that the market has moved. Wait, let me get my pen. We see that this market has moved lower highs, lower lows for roughly 5 years. This is 2012, so let's say 4 years. The top in the market was here in 2011. So we have had a 5-year bear market in gold. But look what interesting has occurred in recent times. We have lower highs, lower lows. The market went up, came down, and then it broke above this high, which is very curious. And what this could signal is this market could be bottoming out, and we could start to see a series of this series of lower highs, lower lows being broken, and what we could see is the market turning around now, and probably we could see a series of higher highs and higher lows, and that is how markets often bottom out. So if you are looking for opportunity in gold, this may be a time that you can see the markets turning around in the gold market. It's still early days in gold. I'm not saying definitively that this market has bottomed out, but it is something definitely to keep an eye out on. Now, for folks in the US, it's a bit tricky trading gold because the government won't allow you to trade in the forex market with any leverage. But if you have experience with futures or options or maybe ETFs, you can take advantage of the gold market if you are in the US. If you are outside of the US, you can take advantage of gold in a forex account as usual. But this is the first in the updates, and it's good to be back, and it's good to be working with you traders who are looking to really improve your trading, and and really looking to make a difference in your financial future. Thank you very much for listening. If you have any feedback for me, you can send an email to info@acestrading.com, info@acestrading.com. We'll be having a webinar shortly. I don't know the exact date, but I will send out a notification of when exactly the webinar is. And it's a very good webinar that I'm working on that will really open your eyes to how to make money in these markets. And it's not just the forex market, but also the stock markets, the futures markets, because you can use essentially the same principles in these markets and apply them to the various different markets. So look out for the date of that webinar. Okay, thank you very much for listening, and I hope you all have a wonderful day.